Cryptocurrency is based on technology, and Moore's Law states that in basic terms, the efficiency of technology doubles every 2 years. Of course, that is a simplified explanation of the law, but the fact remains that technology is growing exponentially, and so are cryptocurrencies. With the amount of the market cap these mathematical wonders now take up, you can't afford to not take them seriously anymore. We've decided to take a look at what the experts say about cryptocurrencies in 2021, and specifically which will be the biggest gainers. Enjoy! But before we get into the video, don't forget to leave a like and subscribe to the channel, with notifications on so you don't miss any of the new videos we post. The crypto market is primarily driven by the increasing demand for convenient financial services and virtual currencies across the globe. The use of cryptocurrencies is less time-consuming as they facilitate easy and fast international transactions with a minimal country-to-country transaction fee. They also offer numerous advantages to users, such as increased adaptability, secured confidentiality, and enhanced portability and divisibility, thereby boosting their uptake at the global level. Along with this, the legalization of purchase, sale, or trade of virtual currencies in several developed countries and the increasing availability of high-speed internet are providing an impetus to the market growth. The market is further driven by the integration of blockchain technology with cryptocurrencies, as this offers a reduced risk of fraudulent or unwanted transactions. It also enables users to monitor the changes being made in real time during the transactions. There are thousands of cryptocurrencies with various design goals. These design goals are to provide a digital currency alternative to cash. Bitcoin, Monero, and Bitcoin Cash, for example, to support a payment system at low cost, Ripple, Particle, and Utility Settlement Coin to support peer-to-peer trading activity by creating tokens, RMG and Machinas to facilitate secure access to a good or service in peer-to-peer trading, Golem Biocoin, for example, and to support underlying platform or protocol, Ether and NEO or NEO. These design goals mentioned won't be exhaustive, as new cryptocurrencies are being created every single day. The cryptocurrency market is segmented based on the market capitalization of a large number of cryptocurrencies. The cryptocurrencies overlap with key areas of the monetary and financial system. Given their rapid growth, complexity, high volatility, and potential for facilitating illicit activities, regulators and policymakers across the world are bothered about their inclusion into the existing system, and the thought of revising the existing system to fit them, if included at all. The global cryptocurrency market is projected to reach over $1.12 billion by 2026. All the way from 858 million in 2019, at a CAGR of 3.5% during 2021 to 2026. Keep in mind, we're not talking about market cap here, which is already over $1 trillion. It's expected that Bitcoin will be the main driving force between the cryptocurrency markets in 2021 again. Forrester chief analyst Martha Bennett predicts how blockchain will impact the world starting this year. Market research company Forrester predicts that blockchain and distributed registry technologies will continue to gain popularity this year. Bennett said, "The company's forecasts are based not on the continuation of trends, but on changes." The report predicts the launch of 30% of total global blockchain projects within the next year. The company's analysts believe that the development of new initiatives, including in the blockchain sector, is associated with changes in the market and economic conditions. Of course, this is influenced by the coronavirus pandemic. In addition, most of the planned projects that will enter the developmental stage in 2021 will use enterprise blockchain platforms. The use of cloud technologies in blockchain development provided by Alibaba, Huawei, IBM, Microsoft, OneConnect, and Oracle will also grow. In total, Martha Bennett made 3 predictions for blockchain technology in 2021. 30% of projects globally will implement blockchain into production. China will make the fastest progress in adopting blockchain technology in its new digital infrastructure, and permissioned blockchains remain predominant in the long run. Anthony Popliano, co-founder of Morgan Creek Digital, is putting his money on Ethereum. Anthony Popliano, co-founder of Morgan Creek Digital, is also confident in the great success of Bitcoin next year. Popliano is basing his predictions on the fact that Bitcoin is gaining immense popularity among institutional investors and billionaires, which means a lot of capital is entering the cryptocurrency market. The latest news on this topic concerns the company MicroStrategy. The company invested $650 million raised from investors in 29,646 BTC at an average of 21,900 $125 per coin. MicroStrategy now owns 70,470 Bitcoins, spending $1.125 billion to purchase at an average price of $15,964 per Bitcoin. MicroStrategy's vision is intelligence everywhere. Their entire company is committed to the success of their customers. Think of them like an intelligence bureau also trying to exert influence on the market. Ethereum, the second most popular coin, may become much more interesting for investors in the future. The Ethereum 2.0 network was recently launched, where consensus is achieved through staking. This can bring passive income to token holders, and given the reputation of Ethereum and its founder, Vitalik Buterin, we can expect a significant influence of funds in the new blockchain throughout the next year. Tim Draper, founding partner of Draper Fisher Jurvetson, or DFJ venture capital firm, says banking costs will make crypto more alluring. Draper says, "The biggest developments are yet to come. Over the next few years, we will be able to run our entire business on the blockchain with deals done on smart contracts. We will allow retailers to accept crypto without having to pay the bank 2.5 to 4%. See OpenNode. Using Bitcoin at retail will become standard practice for any retailer who wants to stay in business. Governments will begin the process of being able to tax crypto transactions or income through accounting systems like Cryptio. Industries that will be changed by cryptocurrency. Cryptocurrency will change many things because it's untraceable and uncontrollable. At some point, retailers will have to start accepting crypto. When this happens, everything will change because other industries will have to follow suit. Let's have a look at some industries bound to be changed by crypto. Taxes. You might not think of taxes as being an industry, but it certainly is, and it's definitely being affected by cryptocurrency. Corporations and billionaires have been evading taxes for a very long time, and let's face it, they've been getting away with it. Because in theory, crypto cannot be tracked, more and more people are following the example of the rich to evade paying taxes. There also seems to be a lot of disillusionment of people who are powerless to change the tax breaks rich people receive, which they see as unfair. So it would seem that more and more have no qualms leaving their money in crypto wallets. Any income into a bank account can be traced and will be reported by a bank, and people have to pay taxes. But there are institutions from where people can cash out without KYC or AML checks, which means no government tax agency can trace the income of a particular person. Of course, tax evasion using cryptocurrency is illegal, whereas the lobbying of politicians by corporations and placing funds in offshore accounts are not. The reason taxes are mentioned here is that it may force governments to start taking action against offshore tax evaders and tax breaks to the people who can afford to pay taxes, while the middle class has to carry the financial burden of normal tax rates. This will be something good. Remittance. Remittance is a $500 billion industry. Often poor migrant workers send money overseas to their families every month, and they need companies that send that money home. Companies like Western Union, MoneyGram, and RIA thrive in the remittance market, and yes, they charge a hefty fee. For example, if I were to use MoneyGram and want to send an international money transfer to Mexico, it would cost around $101 to send just $5,000. It's strange if you think about it. Shouldn't it cost the same if I send $10 or $10,000 to Mexico? The more money I send, the higher the fee. So what's the alternative? Enter crypto. If I want to send $500 to my friend in Mexico, it would cost about 10 cents. Okay, well, let's say I wanted to give them 5,000. Again, only 10 cents. As of 2021, it seems that migrant workers are using Paxful and other peer-to-peer exchanges to circumvent Western Union or MoneyGram. Since the market is intelligent and moves to whatever makes financial sense, legacy companies like Western Union or MoneyGram will go out of business. Of course, we know they call it a business, so they should understand how this whole thing works. In 5 to 10 years, we predict that technology-savvy migrant workers will simply send money home using USDT. That is a very good thing. Micropayments. Merchant fees are annoying. That's why when you go to the convenience store to use your credit card, there's a sign that says, your purchase must be over $10, because the store owner has to pay a fee of somewhere around 2.3% for every transaction. Because of the high overhead, a microtransaction usually doesn't make financial sense, but cryptocurrency has enabled an entire world of microtransactions. Instead of paying a 2.3% for a $10 purchase, imagine paying a fraction of a penny. You can do that right now with stablecoins. A stablecoin is backed up one-to-one with the US dollar. You can buy various types of stablecoins in the market these days, such as USDT, BUSD, PAX, etc. Stablecoins allow online businesses to get payment without hurting their profit margin because of payment processing fees. For example, an online newsletter site could charge users just 10 cents per article instead of a monthly $10 membership fee. Well, that concludes our video for today, guys. What do you think? Feel free to leave your thoughts and predictions in the comments below. We hope to see you back for our next video. Until then, keep well.